The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 18th fabulous Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you now make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on fabulous, fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down about 30 points at 18,874. S&P off 4 at 2183. NASDAQ off 7 points, trading at 5326. The Russell 2000 a tad higher, up 3 points, trading at 1312. The FTSE closed off 19. The DAX closed off 21. Gold's trading up about $10. Silver's down 22 cents. Light sweet crude off 29 pennies out here. Amazon is the leader to the upside, up $7, a little less than 1%. Viasat Inc. up $3. That's about 5% to the upside. Wynn Resorts up $1.50. I don't know why these are all screwed up on my, am I allowed to say screwed up on my chart out here? Maybe I'll try to reboot that thing at the break or what have you. To the downside, you've got GW Pharma down $8, 7%. Hibbett Sports Inc. off $5, down 11.5%. Gap is down 17%. That's off $5. So let's go ahead and take a look at, hey, what are the markets doing today? Now, you and I have been looking at the only type of topping indicator. Now, there's perhaps many others out there, but we have been paying attention to the topping indicator that said yesterday was a top. We have taken a look at charts, S&P, Dow, Russell 2000, to say the pause button has been hit. Now what we have in combination with that is a potential short-term topping pattern. Now we'll start with the S&P 500. And we'll switch from a daily chart, which is what we're looking at here. Now what I was referring to is this TD, Tom DeMark, 9 count. This is the setup. This is where we have 9 consecutive bars, beginning with bar number 1, where the close of the bar is greater than the bar 4 bars prior. And so if you get 9 consecutive, it's got to be consecutive, and then you get that little 9 count out there. Typically, when you see that 9 count, it can be the point at which you see a change in trend. That is what occurred, oddly enough. We talked about this yesterday, down at the bottom here, November 4th. If that's the date, or November 7th. My system's a little bit messed up here, so I don't know which is which on this charting system. I think it's the 7th. Form that little 9 count. You can see it right here. And yesterday happened to be the 9th consecutive bar. Now, it doesn't always work, but we're off to a pretty good start inside of the S&P 500. We are expecting that price will pull back to Stevie's red line. That red line is going to continue to rise, and price will be pulling back. But right now, that is targeted at the 21.59 level. You may remember a few days ago, it was around 21.42. So we've already seen a 17-point move with regard to that calculation. We'll continue to see this calculation. So the two twains shall meet out there. Right? And so, we've got to pay attention to how this is calculated, which subscribers certainly are doing. We're doing that. And that is going to be the line of demarcation. That test is going to tell us a whole heck of a lot. So we've got the beginnings of a pattern that says price is also going to pull back versus just go sideways out here. That pattern looks like this. Now we're going to go down to the 30-minute chart. And I didn't get a chance to listen in on one of Basil's shows, or both of his shows. He's working double time out here today. Triple time is what I read inside the Tigers Den. I was actually having some system problems, which seem to have been resolved. And I know you guys were talking about the key of G, that seventh wave move in the Chapman wave out there, which is a beautiful pattern out here. Now on this chart here, because I've got numbering for the Tom DeMark counts, we've gone ahead and switched this back to letters out here. But letter G is the number 7th move, and I like that baseball. So 7th inning stretch made sense to me. Well, inside the ES Mini, as it was moving higher earlier, oops, I didn't mean to do that. I meant to do this, get my crosshair. As it was moving higher into the 10 o'clock time frame, that's what it did. It made that 7th wave move. So with regard to putting together, right, looking for signals, hey, the daily chart is telling us we should look for some type of topping signals. Well, you know what? The ES Mini, which is correlating in essence to the S&P 500, right? It's a futures contract, which is providing us with much better information out there, by the way, because, you know, we basically have 23 hours and 15 minutes worth of data versus 6. You tell me which ones you want to use. I like to use one with more data. This is about price discovery. This is about pattern recognition out here. So we now have seen price pull back. So we've got that little topping pattern out here. As long as that 7th wave doesn't get taken out, and I don't think that it will, we have the beginning of a move to the downside. 4 on the daily chart for the S&P and Stevie's red line to go ahead and connect. That probably, I gotta say probably, got to qualify it a little bit, but that probably is the next point in time for the next bottom out here. There's some caveats out here, and I won't have an opportunity to go through all of those, but that's the first thing that each of us should be looking for. Now, you might say, well, gosh darn it, Steve, if that was a 7th wave move and all this is supposed to unfold, why did price stop where it did? And that is a great question. And here we can take a look at a couple of different charts, I think. Let's go take a look at a 10-minute chart just to show you how these patterns work on all time frames so that you can help answer that question. If we take a look at a 10-minute chart, right? In essence, if we know that the high came in on the 30-minute, formed that 7th wave. That was here at 9 to be specific. It looks like in the 10-minute chart, right around 940 to 950 out here. And if we start doing those same Tom DeMark counts to the downside, you'll see we get to a 9 count right here, which is right here being 2178 in the ES Mini, right where price stalled. So, you know, the patterns are working. Now, in addition to that, simultaneously, we had the Dow, which has been a strong link in the chain, and it's why we want to pay attention to it, because it could be one of the first weak links out here, is if we go to Stevie's perigee line out here. Now, that is a red horizontal line going across my screen, happens to be priced out at the level of 18,824. We have seen price come down, test it, reject it, test it, reject it, test it, reject it. Hey, today at about 11 o'clock, between 11 and 11:30, was another test and rejection of that area. So the key number in the Dow equity futures contract for the things to just really start falling one at a time, it's going to be 18,824. The Dow and its perigee pivot point would be the first to fall. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 25 points right now. Some emails that are coming in that certainly I want to go ahead, and you can send me an email too as well, Steve at TFNN.com. I even get emails from Santa, which is a cool thing. I don't know if you're on Santa's email list. I apparently am on it big time out here because I get these Santa letters all of the time. But I've got a couple other messages from Santa's elves, and some of Santa's elves are asking questions such as, hey, what's going on with Goldilocks out there? And as we know, gold is, well, we don't know, but gold is trading back $8. 1208.10 to be exact right now. Now, if we take a look at the gold chart, let's pop it up. This is the December contract here for gold. We're not going to see anything that looks very pleasant out here. Here is what we know. No TAS market profiles in action to be able to assist us with identifying any types of levels of support. So we're going to go ahead and turn those off. What we know about gold is that it has made a 100% move of a move. It's doing that today as we speak. It's testing the swing point from May 31st, 2016, 1207 even Steven out there. So far, it's a test and a rejection of that area. Let's go check out volume, and let's do that instead of looking at the futures contracts here. Let's go take a look at the GLD. Right, so we can get a volume perspective out here. So we're testing, in essence, the swing point. I believe it was June 1st. I should make sure of that, but that's the swing point. Let me just make sure. Let me make sure I stay with the days out here, just so we can compare volume on one day compared to the next. That day was May 31st. Okay, so now over to GLD. We'll look at both May 31st as well as June 1st out here, which was the swing point low, just to keep it in perspective. So on May 31st, the volume was 8.1 million shares. We're at 5.6 right now. On the following day, 8.4 versus 5.6. So the question is going to be, I don't know if, at this stage of the game, it's pretty decent volume. It depends on what volume looks like here over the course of the next several hours. Remind me at between 3 and 4, if I don't remember, for us to look at that while I fill in for Tom for the last day here of the week while he is out traveling out on the West Coast. But the question is going to be, are we going to hit this with light volume? We know we're going to test the swing point. It's a light volume test, which means you can't bust it down, so you're going to go ahead and bust it up. Now, many out there are going to say, hey, ain't happening, Steve-O. There is just no way. Have you seen the strength in the U.S. dollar? I know that somebody out there is saying that, and for all types of good reasons out here. And you're absolutely right. The king is back in town. I do believe I wore my blue suede shoes. Do you have blue suede shoes? Just in honor of the King Dollar out here. And we can see that in the A to B equals CD world, we don't have any kind of bullish or bearish reversal signals, what I should say. We're up above the 1.272 A to B equals CD. There's no reason at this stage of the game for the U.S. dollar index to do anything other than head up to the 102.97 area. Well, sort of. There are TD setup, TD sequential, TD combo counts inside the U.S. dollar index, many of which fired off yesterday, but prices moved above yesterday's high. So those were just simply signals at this stage here. Those signals have not confirmed any kind of a top inside the U.S. dollar. So you're saying, Steve, why are you even spending the time? I hear you. The U.S. dollar index is going higher, and therefore Goldilocks, tell Santa's elves that Goldilocks has to be going lower. Lee Corso would absolutely say not so fast. And why would he say not so fast? Well, he'd say the only currency pair that gold is out of sync with, well, he would say it this way. He would say, let's go look at the plays out here. Let's go look at the X's and the O's. Let's go see if we can find a little love when we take a look at the correlation between gold and the U.S. dollar index. And voila. This is Lee Corso's page out here. The top portion of the chart happens to be the continuous contract for gold, showing you the closing price on each of those days. And the bottom portion of the chart is the U.S. dollar index. Now, I have inverted the U.S. dollar index. That way, it correlates to what Santa's elves believe, which is if the U.S. dollar index is going higher, there is no way that gold can go higher. Really? So what are all these divergences out here? Because you see, on the bottom panel of my chart, with regard to the U.S. dollar, I've inverted it. So if it's moving down, such as right here, we'll just simply come from the time period of, September 30th, 2016 through about October 30th, 2016. The U.S. dollar index was getting strong like bolt. And what was gold doing, by the way? Went on to make higher highs out there. You can see these divergences. We could go back and we could find many, many more. So I say, hold on a second here. That is not always the case out here. If it were the case, it would be so easy to trade these different commodities out here. But we can show you just on this chart here, which is a daily chart, and it's almost like a 50-50 kind of a deal out there. Not exactly the type of odds that I want. That's not to say that the U.S. dollar index is not an influencing factor with regard to commodities prices, but we need to be realistic and take a look at, well, what's the real story out here? Versus just sort of believe what our eyes haven't seen. Now our eyes have seen this. So I'm still looking for a bottom inside of gold. Why am I looking for a bottom? Is it just this chart? The answer is no. If we take a look at gold, well, here's the first chart. This chart is pretty important because the divergences in this chart with regard to Goldilocks are worth noting. And this chart shows gold, again, the continuous contract for the most part on the upper portion of the screen. I have to say the most part because the symbol I have there is a synthetic symbol, so it's not exactly. It's a little bit of a 10-minute delay out here, but it doesn't change the price of gold. That was just simply for some TAS market profile work that I was doing. The bottom portion, though, happens to be gold priced in euros. And gold priced in euros, believe it or not, when you see a divergence, tells us what gold price in dollars wants to do. It's a matter of identifying that pattern out here. And right now, gold priced in euros is making higher lows out here. Not the case, obviously. We know that with regard to gold priced in dollars. Now, look, it would be foolish of me to just stop right there. And so I'm not going to just stop right there. If we take a look at gold priced in Japanese yen, we can see that's now the top portion of my screen. We can see in this currency pair that we've got gold making higher bottoms out there. Let's not just stop. Those two are part of the U.S. dollar index, so let's not just stop right there. Let's go ahead and add the South African rand. We got a lot of gold mined in South Africa, do we not? Not a part of the U.S. dollar index, by the way. And in this currency pair, what we see is a rising bottoms pattern, not what we see inside of gold priced in dollars out here. So that's telling us that this currency knows what's going on. Let's not just stop with the South African rand, for goodness sakes. Let's go take a look at the Australian dollar, not a part of the U.S. dollar index out here. And what is gold priced in Aussie dollars doing? Yeah, it's got a nice little, this is a daily chart that we're looking at. You kind of getting my drift out here. And the only thing that is unhinged other than me is gold priced in all these other currencies is giving us a bottoming pattern. And the U.S. dollar index is not the only influencing factor with regard to the direction of gold. We're not there just yet, but it's coming to a screen near you. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 22. S&P is down 3. Some people use an 8-ball. I like to use a soothsayer. And let's go to our favorite soothsayer. That is John in Philadelphia. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Steve, I'm doing very well. Thanks for reviewing gold and those numerous currencies. That's a real helpful perspective, so thank you.
You're welcome. My pleasure.
I wanted to ask you about stock ticker symbol AG, First Majestic. That's a silver miner.
Yep.
And see if you could give me your eyes on that security. And just before you do, I offer up just an observation for you and your listeners regarding gold, the price action, and the next couple of months. First, I will share with you, I follow the time cycle work put out by Princeton Economics. That's Martin Armstrong's firm.
Yes.
And since gold topped in July and is making lower lows here, I just share with you something coming out of his work saying the month of January on the monthly chart basis is a target for a turning point. So as I look at things, if gold happens to work sharply, lightly, or irregularly lower the next 40 days, I will be looking with keen interest towards a turning point low. So that's the first thing I wanted to share. The second is just an observation of history. And Steve, if you and your listeners just go back and look at the weekly chart in the gold price, what you'll see is the year 2013, 14, and 15. Each and every year, gold was declining from the summertime and bottomed either December and or January. And here we are, 2016, fourth year in a row, where we made a high in summer, July 8th at 1377 specifically on the gold price. So if we work irregularly lower, I will be looking in earnest for any low being a candidate for a bottom.
Sure. So those are great observations, and thanks for sharing that. I know you mentioned, I know I heard 2015, 2016. Did you also mention 2013 too? I just didn't. I was multitasking because, gold made
2013, 2014, and 2015.
Yeah, so folks, if you're watching us on Tiger TV, what you are seeing on my screen out here, are those data points. So, and I'm actually glad that you brought that up because that'll end up being a segue into another segment that I'll do during the show out here. So, because, those seasonal cycles are really important. So, so thanks for sharing that. Much appreciated. You want to take a look at?
So the real reason I called was to ask if you can share with us what you see on First Majestic AG, be it the weekly, monthly, or daily charts, please.
Yeah. Okay. Sure. So let's start by taking a look at the daily chart, and we can see that it's consolidating down at the bottom here, doing it with relatively light volume. We've seen a sign of strength. We've seen really two signs of strength inside of AG, First Majestic. The first sign was on November 2nd, was 11 million shares. The second sign, well, it was a wide-ranging bar on that. Well, it wasn't such a wide-ranging bar. The real wide-ranging bar was on November 9th, which had even more volume of 14 million shares. So we know that we are pushing highs with volume, whereas on the lows, we've done about 4.2 million shares. We've done 5.4 million shares. So this continues to push lower with light volume, push higher with strong volume. So there is probably a bunch of accumulation going on down here. And at this stage, for folks that would be interested in getting into AG, the actual buy area, so that you'd be looking at it from a long-term holding perspective, would be somewhere between 784 and 820, and we're traded 835 right now. That's how someone that might be interested in building a position would look at it. If it takes out the low right now, we'll just say the low of November 14th from a daily perspective, meaning closing below 775, then that analysis that I just gave would, especially if it does with volume, is likely to be incorrect out here. So that's what I see taking a look at some of the TAS market profiles and just simply taking a look at volume. If I go to my other charts out here, John, where I look for, maybe a TD sequential count on a daily basis. Where I come up with that happens to be the November 14th candle. And that was a TD sequential 13 count, according to my system.
Is that a fact? Can you display that on Tiger TV by chance?
I will. This chart here gets a little jumbled. I apologize. These candles are kind of smushed together in a weird way. And it happens to be this bullish piercing candle where I've got my cursor. I know you can grab a picture of this, but that would be the TD sequential 13 count. So that candle... Go ahead.
That's fabulous. Thanks for sharing that. Yes, I see.
Yeah, so that's a important candle session. And so, when I start looking at, so here's how I would then also put all that together. But we're going to go from silver over to gold if I can. And this is what I'm watching. So I'm just going to share with you and others what I'm watching. I know that gold price and all these other currencies that have nothing to do with the U.S. dollar index, that doesn't mean that the U.S. dollar isn't strong against them. But we've got all these other currencies that are saying, I don't buy this necessarily. And I could absolutely be wrong on that. But one of my favorite patterns, doesn't matter what time frame it's occurring on, is in this case here we're using a 30-minute chart, and price was moving lower into the wee hours of the morning. And I know you use time frames of the day in making your trading decisions about gold. You have a really extraordinary perspective with regard to how the metals are traded. Don't need to get into that. But here's what I do know: at 3 o'clock this morning, price was moving lower, doing less relative energy, and it formed a nice little hammer candle. So that says that the low of the day, the low of the morning out here, is a real important low. From there, what we saw was price go up, and in Basil's Chapman wave system makes 4 waves to the upside, starts to pull back. We still haven't taken out that hammer candle low. This could be the start of an A to B equals CD to the upside. Maybe it's nothing more than bear market bounce action. I don't know out here, but I'm certainly watching this because it has the potential to go ahead and mark a bottom out here. Now, gold has not gone. So what first needs to happen in this chart is gold has got to get, doesn't have to do it today, can do it Sunday, can do it early Monday, whenever it does it, needs to at least make the 1220, the 1-to-1 A to B equals CD to the upside, to then give us a glimmer of hope that maybe there is a bottom that's formed. Now, the problem with that, as you know, in this bear market that we're in, that move to 1220 or even 1224 is nothing more than a potential Gartley sell area. So it's really, the next retracements after that would give us the big clue out here when I take a look at gold.
Steve, thanks so much. You have a good weekend.
You bet. Thanks very much for sharing. That was John in Philadelphia. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back for folks. Now, I don't want to beat a dead horse, so to speak. Who would even beat a dead horse? Where the heck does that one come from out there? But, metaphors. Hey, and metaphors are really important. We each, I talk about being able to find a gift in every set of circumstance. So rule number one is to have positive influencing metaphors out there, because people have we all have negative influencing metaphors, do we not? Somebody might feel like they have a noose around their neck. That's not a very positive metaphor. If you got the weight of the world on your shoulders, that's certainly not going to feel good. You got something that feels like you're carrying heavy baggage, right? You've got to be able to turn those into positive metaphors. I know somebody that can create a positive metaphor for us. That's Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you doing this afternoon?
Very good, Steve, and you?
I'm doing very well. Thanks so much for asking. Are you prepping for Thanksgiving? What's on the?
We're doing the turkey thing. Oh yeah.
Okay.
Yeah.
And what's your favorite part of Thanksgiving?
Eating the turkey.
Eating the turkey. That's a good part of it. Now, do you eat early so that you can go back and make a sandwich, later on that evening, or when do you guys?
Absolutely. We do the sandwiches the next day.
Okay. All right. Good. Glad to hear. So you want to take a look at? You're asking about nugget dust. So you've got both sides of the trade there. Tell me how I can assist you.
Well, I don't know where it's going. If it's going to go down further. Gold.
Yeah.
So I'm not in any of it, but I'm just wondering if there's an entry in dust or gold.
Well,
I
think, Lou, at 1:44 in the afternoon, because you're not in you're not in anything. We know the influencing factor inside of if gold is going to bottom, we will see a series of higher lows and higher highs. And I'll just simply use the 30-minute chart that I pulled out before. And until we start to see that, I would say neutral is a better position, or at this stage here, I'd have to go with the flow that says gold itself may want to trade lower out here.
Right.
However, what you're calling about is the actual miners. And as I take a look at the miners themselves, and GDX is probably the better of the ETFs to look at to then gauge your decision about nugget or dust, here's what we do know. That on the trading session of November 14th, when the GDX traded lower, it did so with 135 million shares. Bounced basically for a day, moved sideways for 2 days. Today it's pulling back, and we're trading inside that swing point. We're doing it with much lighter volume. The problem is we're inside that swing point. So the numbers for you to focus on are either the low of November 14th, which is $20.13, or the high, which is 2176. If either gets tested and rejected with light volume, then that gives you your signal as to what trade you would want to go ahead and put on. But if, as far as dust, which is in essence your bearish bet on the miners, what you would probably want to do, Lou, is to, there's our hidden levels of support, which are our TAS market profiles. And right now, GDX is pulling back to the bottom of its box out there at 2069. It's really not a good area to begin a short position on. You'd rather, in this case here, you'd rather sell a breakdown with some volume than certainly try to get in. And at this stage, I would say, instead of going long the GDX, I would be patient and wait to see if we get a series of higher highs and higher lows on an intraday time period for gold itself, but maybe for gold and for silver out there. And then that would give you the piece of information, that right. You would be looking for. So light volume pullback, but I think you actually have the proper trading decision right now, which is neutral.
Right, I've got that. And what I usually do instead of going into dust is short nugget.
Okay. Yeah. Many different ways to play this, for sure. I would just keep an eye on the GDX. I'd watch volume. The market profile you're paying attention to is $20.69. If it moves below that, and then it moves below $20.13, then there's another leg to the downside inside of the GDX. But I can't say all. I've looked at a handful of mining equities, which really represent what we're looking at inside the GDX, and everything today is pulling back on light volume. That's with gold being down $10 right now. So, the miners aren't convinced that gold is going to fall apart, too.
Yeah, that's what I thought.
Alrighty?
Okay, Steve. Beautiful, as usual.
Well, thanks. Thanks so much for calling, and enjoy your Thanksgiving, your turkey, and especially those turkey sandwiches out there. You can't beat a good turkey sandwich.
You cannot.
All right, my friend. Thanks so much. Now, for me, folks, so my favorite part of Thanksgiving, food-wise, is I like the stuffing, bread stuffing. My dad, when he was alive, he was the king of bread stuffing out there, and I love that. The fresh mashed potatoes. Now, what I do is I use sautéed onions out there in lots of butter. So Nico would be very happy with us about the onions in the sautéed butter. I'm not sure his position on the potatoes, but it's kind of like a once a year kind of a deal. And you take those potatoes, you can throw them on the bread stuffing, and man, that's pretty good. And as far as fruit, to get a piece of fruit in there, you got to go with the cranberries. But you probably won't like the fact I've tried all different kinds of cranberries out there. And you're not going to – the ones that I like, probably just simply because I've been eating them since I was an infant, right, are the ones, are the canned, nasty ones that are for you. It's the jellied cranberries. Those of you who have had it, you know what I'm talking about. It is just that basically pure sugar dressed in a color red out there, but I like them. So, in any event, that for me, those are the in just in a moderate amount out there. And I never feel good when you're just so full. And then football, right? Can't beat that. Maybe golf, a little bit of everything. In any event, let's go back to the market. So we've really kind of ripped apart the gold sector, what's going on there, the mining sector. I think we've ripped apart the indices, the futures area, what's going on there. What should we – I know what it was. There was a question that came in. One of San Jose's was asking a question, and it's interesting. Our man John in Philly was talking to us and sharing with us something really important, which are the bottoming cycles, the annual seasonal cycle inside of gold. That being, as we're starting to move into it, the December-ish, January-ish time frame out here. The question that came in was somebody said, Steve, you make such a big deal about the Santa Claus rally beginning in October. Can you just share with me, more reasons why? And now, look, I have taken the 84 years worth of data, averaged it out to understand when the market typically makes a bottom, which is like October 13th of this trading year as one of those examples. But let's do just like we did with John in Philly. So let's go ahead and open up this chart out here. Is this the chart that I didn't know? That's not the chart. It was there was this one right here. This email came in before the show, so I said, let me just pop open the Dow, and let's just go ahead and mark those bottoms. Now, they're not always on October 13th, okay? They're just simply not. But here's the bottom that came in last year in September 28th, during the week of September 28th. Nice bottom, Santa Claus rally. Gotta like that. When we come back from this break, let's go look at some of those other important fall bottoms. Bottoms up. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, always bad to do what I just did out here. Get the break, the commercial's playing. I said, hey, let me go look up Ocean Spray jellied cranberry sauce. Those of you, I'm not the only one that buys that. And you go to the grocery store, I think, what do they get, the 2-for-1 out there? And I said to you, it's really just sugar disguised as a red sauce, right? So I wanted to find the ingredients. So I went ahead and searched for the ingredients out there. I've got, I don't know if this is accurate or not. It's probably accurate. So I got the nutrition label for foodfacts.com and the nutrition label out here. So the total of calories 110. So that's not so bad. But as you go through the percentage daily value of things out here, basically everything is like 0. Cholesterol 0, sodium 1%, total carbs 8%. Okay, sugars. Sugars. This is a funny one. I don't think I've really seen anything in another can. Maybe some of you have seen another can. Sugars. Guess what the percentage is of sugars inside of jellied cranberry sauce out there, Ocean Spray? Yeah, you got it right. 84%. 84% actually kind of made me smile and laugh. Doesn't matter. I'm still going to go ahead and have a slice or two. So nothing like turkey to put you to sleep, and then Ocean Spray jellied cranberry sauce to go ahead and light you back up on fire. But hey, we were taking a look at, speaking of lighting back up on fire, we're taking a look at these bottoms that form in the fall, typically in the fall. You have heard of the October surprise. We'll look at a couple of those October surprises out here. But basically, if we look at the most recent 2015 deal, we saw the bottom really come in September, around the September 28th, the week of October. And I'm looking at a weekly chart. That way it's condensed. We can kind of see it. There were, hammer candles that were forming, ends of patterns, all those types of things out there. Then the one prior to that in 2014, that took place, oddly enough, on the week that began October 13th. Really not that odd. It actually occurs out here. If we go to the one in 2013, well, that was the week of October 7th. If we go into the 2012, took into November, the week of November 12th, 2012. Now, what else does 2012 have in common with 2016? Just saying. So you've got the week that began November the 12th. 2012. And if we go to our current week, last week, November 7th, 2012, hey, kind of ringing a bell, an election year, gets a little deferred with regard to that bottom out here. Yeah, you knew that. Hey, I'm not making this stuff up. I don't need to make this stuff up. And now in 2010, all right, coming off that March 09 bottom out here, it got an early start. It was August the 30th, 2010. Hey, even in 2009, they got an early start back in July. So the October surprises really came, right at the high back in 2007. We're not there. The Dow, the S&P, the NASDAQ Composite have all broken above consolidation patterns. Only if price gets back in the consolidation pattern is it a false break. At this stage here, it's not a false break. I mean, this is the deal. This is the real deal out here. Prices are headed higher. 21,170 in the Dow. That's where it's headed to. I'm not going to give you the day and the week and the month and the hour when it's going to hit that level. It's probably sometime in, I don't know when it is. But that's where it's headed to. 2456 is where the S&P is headed to. 5545 is where the NDX is headed to. In order for the consolidation pattern inside the Russell to complete, it only needs to make it up to 1375, another 62 points or so out there. That one's going to have to be adjusted because the Russell, that's headed to another planet, another constellation. And I'm going to be here with you. Hey, look, stay tuned. David White will be up next. I'll be filling in for Tom from 3 to 4. If you're off to start your weekend, have a great weekend. Thanks so much for joining us, and we'll see you on Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.